Welcome to this edition of the Capital Brief. I'm Seth Berenzweig, managing partner of Berenzweig Leonard, our business law firms right here in Tysons Corner, Virginia. Good afternoon to my colleague John Tamney from Real Clear Markets. John, how are you?
I'm great. Good to be back.
You bet. Before we get into our topic today, I've heard some chatter that there's a new book coming out that you may have a little bit of something to do with. What am I hearing about
You
that?
heard correctly. It is titled When Politicians Panicked. It's an economic history of the lockdowns. It's a very scathing critique of how the political class responded.
Well, I can't think of too many other more pertinent topics smacking American business in the face right now. So that's tremendous, and good luck with that.
Yes.
I'll be the first one in line with my coffee, getting ready to grab the copy. So, we're here today to talk about something that just about everybody in the country has been discussing at some point over the last couple of weeks. The Robinhood, Reddit, GameStop blowout and controversy. And I think anyone would have to really be living in a cave to not have some idea of what's going on. But to just set the table a little bit, why don't you just give us a little bit of the background just so that the viewers can get caught up to speed and we can set the table here.
Well, there's a running joke among investors that GameStop was sending messages to Blockbuster that will soon meet you somewhere. And the idea was that GameStop had a business model that was dated, and so hedge funds, including a very prominent one called Melvin Capital,
Right.
had shorted the shares. Shorting is a very heroic, very risky act that brings honesty to markets.
And a very controversial one, too.
It's a controversial one, I think, unfairly. But as a response, Reddit investors, there's a group, an investor group on Reddit that basically decided to, as the media account of it goes, gang up and start buying the shares in bulk. Just everyone ganging up in one day, buying it and driving up the shares, and let's drive out these shorts.
The Reddit Rebellion.
The Reddit Rebellion, I think it's vastly overstated. If you could just gang up and drive a market in one direction, that's what hedge funds would do every day.
Right.
So I think history is going to show that this isn't what happened, but what did happen is that GameStop shares soared, and as a consequence, Melvin Capital needed a bailout from two other hedge funds.
Right. And Stephen Cohen, who many of us know, came in with the money, and Mr. Cohen ended up jumping into the pit of the fire because he was getting a lot of flack for coming in and helping Melvin Capital, and there were a lot of threats and unfortunate things that were happening to him online. And although Stevie Cohen has a pretty controversial history, we certainly don't want to see anybody's family threatened. It was really red hot. The temperature in the room went up. And this was a new age of economic populism. And I think that one of the things that you had briefly referenced was that, the stock has gone up and down. I took a look at the year-to-date chart this morning, and roughly speaking, already the stock went from about 50 to about 350 to about 50. So that is the tale so far, and that will be told. But what has happened now is that this is not the end of the story, but is really just barely the beginning of the first chapter of this new story rocking the financial world of basically economic populism, where the Reddit rebellion was really rolling into something now that has gone through a lot of other things, such as commodities. The SLV has gone up. Marijuana companies have spiked up. And now, of course, we have the attack of the SPACs. We have the crypto craze. And just to tell you a really quick story, my son Adam called me from the University of Maryland this morning, and he said, "Dad, you got to get on this on one of these little crypto issues." And it's not Doge and it's not Bitcoin, but it's one of the lesser knowns. And I just said to him out of curiosity, I said, "What's the price action this morning?" And he said, "So far it's up 80%." So, on the one hand, you want to have economic populism and you want to let people win. We don't need Washington just throwing down regulations to try to save us from ourselves. But what are some of the big issues from a government regulation perspective, if any? Because if we really want to have the retail investor be a winner, then the retail investor needs to win rather than getting fleeced and having his or her stock go down from 350 to 50 when you and I knew that that's where it was going. What, if any, message or what, if any, lesson is learned from this whole mess in terms of the need, if any, for some kind of intervention or government regulation?
Well, I think with the government intervention, they're always going to be fighting yesterday's battles. And so you can imagine that I don't want government to get involved here. What I think should happen is that people should realize buyer beware. These are good things when stocks reverse like this, because it reminds people that investing is a dangerous game. There's a reason that just about every hedge fund ever created hasn't made it, because markets don't always move in the direction you think. And a perception was created, well, if we just get together in groups and band together, we can move markets. Not true. And so I think that the regulation was the decline in GameStop shares, that on its own was a big positive.
The market can regulate itself, in other words.
It will regulate itself, and a lot of people, I think, were burned. What's interesting is when you look back, politicians want it both ways. We both know that AOC and Ted Cruz agreed, well, it's not fair that Robinhood kept out buyers of GameStop.
Right.
They felt that way when the shares were going up. Imagine if Robinhood had been able to clear all those trades a couple of weeks ago with the shares back down to 50. Do you get the feeling that Cruz and AOC would be saying, oh, look at what you did to the small investor, Wall Street once again getting the little guy, we've got to regulate this?
You know, I haven't heard anybody yell at Robinhood about that. That's a really interesting point that no one has mentioned in the media. Imagine that. Why are the shorts so vilified? And people who do that come in with the fundamental question of what value in the world do shorts create? What's your reply to that?
Well, oil companies are vilified too, but we couldn't live without what they do. And I think there's a desire to quickly misperceive what shorts do. They say, well, you just sell shares and you ruin companies, and so you're bad and you put people out of work. But let's talk about what short sellers do. If you are skeptical about a company's shares, you go into the market and you borrow. You pay an owner of those shares for the right to borrow those shares. You then enter the marketplace and sell them. To be a short, there must be someone who disagrees with you who is going to buy those shares from you. So the short has sold the shares borrowed and then must sit nervously and hope that the markets agree with his or her skepticism.
They could win, they could lose big time.
Yes, if they win, they go back in and buy back the shares they sold short, and the difference between the sale and the buy is their profit.
Right.
But as we saw with GameStop, you can profit a little. If you're wrong, you can be endlessly wrong. Again, as you know, the shares went up to 350, so they're taking a major risk doing what they do. But let's remember what the short sellers are also doing. They put floors under markets. When short interest increases in a market, when more people are short shares, that's a signal that buying is eventually going to take place, that there's going to be a big surge of buying that underlays the market. So when you remove shorts from market, you take away A, pricing honesty, but B, you remove essential buyers from the marketplace.
Well, the thing that was just amazing about this one instance on GameStop, and it's a story that has now progressed to a next chapter we'll talk about in a moment, but Melvin Capital were the guys in the suits that came in ready to make a bunch of money. And in this one particular instance, they got taken out on a stretcher. Within 1 month alone, Melvin and some of its colleagues, just on their GameStop positions alone, lost almost $20 billion. So as you say, it's not an easy job. They can win, they can lose big time as well. And the proponents of having a little bit more of a broad view, even though shorts get vilified by a lot of people, for better or for worse, is that they also have had a history of smoking out some mischievous conduct and fraud, such as the collateralized mortgage mess, and all of that happened not too long ago. So that's a whole issue. But the other reason why I think it's interesting to talk about this mess now is because as we're looking at new crazes, Services and people going in on a crypto craze and the SPAC attacks and the next hot things. It was announced today that the Justice Department has issued subpoenas to several of these organizations, and the House Financial Services Committee has announced that next Thursday morning they're going to be conducting a hearing, which of course will be live and in living color on television, to start to get into this. So the government's nose is already in the tent. I know what we think should or should not happen, but as a practical matter, where are we going with this? Because in this kind of a story, we've never seen anything like this before. You've got cryptocurrencies and stocks that are going up over 100% in a day. Where do we go from here?
Where we're going to go from here is that invariably when you see that kind of price action, there are going to be some winners, but there will be a lot more losers. Let's go back to the internet craze. And thank goodness for the internet craze, but back in the late 90s, early 2000s, lots of different companies were funded, lots of people piled in, lots of people got burned. Are we much better off for this? Yes. 100 years ago, there was an automobile craze. 2,000 car makers incorporate, most of them die. Same with the internet. But we are much further along, and so what we're seeing right now is that there's new interest. There's an interest in private money sources that could eventually replace the dollar. Mm-hmm. Because of that, there's going to be lots of speculation. Again, winners and losers, and the tragedy of this is rather than politicians saying, this is how economies grow, this is how we generate information, this is how we learn what the future is going to be like. Right. When the inevitable losers come up, and there will be losers, they're going to say, well, we need to re-regulate this. We need to limit the ability of markets to lurch in one direction or the other. Right. We need to put in prison those who issued these different companies.
Vilify somebody.
We need to find how many millions did Jeffrey Blodgett years ago, he put a $400 price target on Amazon, and he was fined millions for having the temerity to think the company had a good future. So it's sad where this is going potentially.
Right. Well, you talk about learning. On the one hand, it's great that we have new folks, including young folks that are coming in and really getting passionate about the market. But if the government wants to do something, it could create an encouragement for education. Sometimes you can help people by suggesting doing certain things as opposed to commanding it, letting people understand that they could also read the Wall Street Journal, Investors Business Daily, Financial Times, to be able to go in and actually use this as a learning experience so that they could really leverage down on that excitement. Unfortunately, what happens is that when Washington takes over, it really turns into a drama show as opposed to a lot of substance. I think there are some things in the middle ground that the folks on Capitol Hill could do. They could come up with minimal regulation. They could go regulation light. They could say, how about saying that you can't short more than 100% of a company? I know that's controversial. I don't see why you would need to short more than 100% of an entire company's stock. How about requiring that if a company's stock goes up 25% or more, to have some kind of a regulatory requirement that says that within the next 10 days or the next day or two that you should issue some kind of a notification about whether any new material transactions or financial developments of the company, so that people can at least know what's going on, because you can't really have financial democracy when people are losing their shirts, right?
Well, I think that's how you get it. I think the most important thing, I would rather politicians stay out of this altogether, would be to say, hey, look, markets don't go up all the time. Recognize buyer beware. They should make plain that there's a reason that it's so hard to make. There's a reason that there's so many millionaires and billionaires on Wall Street, because those are the ones you see. The unseen are the exponentially more that never make it. And so I think that would be the better way. As far as limiting the number of shares that can be short on a company, there's really no way to do that. And an obvious way to explain this is I borrow 100 shares of Amazon from you and short them, and so I sell them into the market. The new owner lends them to Todd Castleberry, and he borrows them and sells them. It's very easy for short interest in a company to rise beyond total outstanding shares, but that's, once again, market forces at work. I'd rather markets work this out rather than politicians.
We're going to have hearings next week, as we talked about. The House Financial Services Justice Committee will have them. The Justice Department has issued subpoenas. Other areas of the government have issued subpoenas. This is going to get hot, especially next week. Just from an investigative and purely informational standpoint, when you've got these hearings and there are people who are up front and center, do you think there's any kind of information or any kind of particular questions that could be asked next week in these nationally televised hearings that could provide some kind of value or some kind of benefit to America when it comes to this issue?
I think there could be these questions. I don't expect them to be asked. I think, as we know, historically, politicians use this as a chance to grandstand. But I would love for them to bring a short seller up and say, explain to me, to all of us, what you do, how you bring honesty to market prices. I would love for them to bring a failed hedge fund manager up to explain how the hedge fund failed, a successful one also. Let's talk about this. I would love for someone at Vanguard to talk about the meaning of index funds, why they're very often the best way for a small investor, that investing on your own is like cutting your own hair. It's a very dangerous process to enter into.
Well, wouldn't it be great if they could ask some relevant questions? When you're talking about that, it reminds me of the hearings that happened just a couple of weeks ago, where the United States Senate had an incredible opportunity in one of its other dramatic televised hearings. And they had Dorsey from Twitter and Zuckerberg from Facebook testifying. And they were talking about Section 230, the law that provides blanket immunity for all kinds of social media postings. And it's really controversial. And there's obviously the world of social media is very relevant to what we're talking about, because the plumbing underneath the Reddit revolution was fed by social media. And they have had many opportunities on Capitol Hill to have some of the most powerful CEOs, some of the most brilliant minds in America available to ask all these questions, but instead you get these knuckleheads like Ted Cruz asking Jack Dorsey, how many people voted for you to be president or to have power, and they just end up being a bunch of drama mamas, and they really don't get anything done. One of the reasons why cryptocurrencies are getting an extra look right now is because they're not regulated, and people feel they see these things happening in Washington, they lose fundamental trust of their government, and they don't want to get tied to a fiat currency that's being regulated. They'd rather have something where it's not going to be regulated by these jokers on Capitol Hill. Thank you very much. So do you think that any good is going to come of this? Or is this a moment for any kind of real financial or educational change about the markets in America? Or is this really just going to be a wave that's just going to wash in and out and nothing's going to change?
Well, I think you just said what's going to happen, asked and answered. It's going to be lots of talk, lots of grandstanding, nothing learned when in fact something could be learned. And I think the same thing is going to occur with the cryptocurrencies. Most people refuse to understand what money is. Money is just an agreement about value between two producers. All financial transactions speak to the movement of real goods and services. And so, as you allude, there is a desire, I think, among some people to have money in their pockets that they trust. If you gave me a choice between earning JP Morgan, Amazon, or Target dollars versus Federal Reserve notes and how they've been overseen by the U.S. Treasury over the decades, the question is too easy to answer. I would much prefer to own JP Morgan dollars, because if JP Morgan devalues the way the U.S. Treasury has done periodically throughout time, I put them out of business. I stop getting paid in that currency. When my only choice is a Treasury, Federal Reserve note, I'm limited in terms of my options. My work, the value of my work, is taken from me as a consequence.
Well, it's interesting that you talk about the currency within the company, because that thesis was flipped on its head just a couple of days ago when Tesla put $1.5 billion buying Bitcoin, I believe, was the coin, and it's gone up a lot since then. Elon Musk is no dummy. So really, I think that we are in a unique, defining moment at the intersection of business and politics, where days beyond the first inclination of what ended up happening with GameStop. But we're also in the very first inning of seeing how that economic populism is going to wash forward and everything else. And we're going to be able to see right here in Washington next week what the first chapter is going to be on how is Congress in the hearings going to be handling this issue? Are they going to be able to focus on the real issues, or is this just going to be an opportunity for a bunch of political grandstanding? Your prediction is that it's just going to be more of the same. My prediction is that I think that it may fall somewhere in the middle. Obviously, it's going to depend on whether some of the savvier congressmen and women will be able to step forward and ask the real questions. But this is really an opportunity to provide a lot of education. Don't look at it as an opportunity for Washington, D.C. to throw a lot of regulations on top of us from above. Show the opportunity and the power of how the internet, which created this whole Reddit revolution, can be a huge educational source to help people learn more about how they can harvest the power of the market so that they can have a more sustainable way of getting rich other than just throwing dice on the table and keeping their fingers crossed on GameStop.
Mm-hmm. Let's hope that we get something positive from it. My sense is that politicians are scared. The great Ken Fisher has always said technology tends to outrun government, and technology is getting faster and faster and faster. And we're seeing this cryptocurrencies. If suddenly we are operating, if we are exchanging in ways that government can't track and watch, these are going to be interesting times.
Interesting times and interesting weeks ahead. John, as always, thanks so much for coming in. We're going to keep an eye on those hearings, and as well as keeping an eye out for your book.
That's right.
And look forward to talking to you again real soon.
Thank you.